chance from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and today was absolutely insane. We started off so good. Literally in the morning, I was like, it's risk on, crypto's going up. And then by the end of the day, we somehow closed just under 1%. So I thought I'd take the moment to talk about the Cramer curse, and what could help me out here is this beautiful Starbucks. This is not an advertisement. Again, they should sponsor me, but this is not an I don't even own the stock yet. I want that divvy. But anyways, pretty much last time I dropped the coffee in 2020, I dropped it on stream. Oil went negative, right? That's kind of like the coffee curse of the cult. But today, Jim Cramer rang the bell to open up the stock market, and literally we had to have debates today. People are like, wait, why is the market down? Was it Apple News? Was it oil? Or was it Cramer? And literally why people are saying that is because the last time Cramer rang the bell, it was March 6, 2020, and that was one of the worst market days since 2015. So that's what we have today. Cramer rang the bell, but this is what the watch list is for. We're going to talk about the reasoning, and it goes a little deeper than Cramer, but always fun to see. And Cramer, you know, thank you for your book. I learned when I was 14 from Cramer. Yeah, shout out to Cramer. I'm not as big of a Cramer hater as the whole world. Again, I don't know if Cramer even likes it. Cramer don't even know me, but right off the bat, wait, make sure you drop your thumbs up, and we'll see you on stream, youtube.com/thestockmarket tomorrow morning. But let's talk about the keys. Let's get into what happened today. It was very, very simple. We started off very risk on. Again, crypto is doing good. The dollar was down 1% at one point, and this is very bullish. Again, we brought up the dollar doom loop yesterday. People are bringing it up today. So the dollar coming down, that was very good. We opened up with good bank stock earnings. Goldman Sachs absolutely killed it, and bank stocks were up. They ended up selling off there by the end of the day, but that was looking good. And then the riskier industries, communications, discretionaries, tech, they were doing good while healthcare and everything was down. But the problem was it just wasn't that big. So even on the upside, we were up the most by 1.5%, but then everything kept coming down here right when we got the Apple announcement. So if you weren't familiar, a lot of people asked, like, look at this, bro, the stream alert. We were like 10 minutes early on this before anybody, but there was a Bloomberg report. Apple did not say anything, so don't get this one twisted. Apple is yet to comment on it, but analysts who've been watching the company closely, they pretty much said Apple is slowing down hiring and slowing down spending in some segments because they're worried about economic uncertainty. So that's why they decided to do it. Things reacted. You had news from Google like that a week ago, but overall, that just wasn't good. And right when that announcement came out, the market started to drop a little bit bigger. So why was this so important? Was it Cramer's fault? It was not. And here is the logic, or at least the narrative that's going around right now. And people are saying, well, there was such a big reaction to Apple not hiring because this could affect the jobs report or the jobs market. But if you think about it, the only good piece of news that we've had recently has been related to the jobs market. Pretty much the jobs market is the only thing that is not crashed yet that's saying, look, there's a recession because the job market is so strong. Pretty much you have never had a recession with the jobs market or jobs numbers where they are at today. So that's why some people are saying, well, if this is preceding a lot of the data we're going to get, that may not be a good sign. So that's kind of what we're running with today. That's why we saw the reaction. I even brought this up today. You'll see most of the day, like, this move looks very big, but it wasn't. This was only 1 point. It was very slow. But then after the Apple news, things started to pick up. And literally, I think top to bottom, I mean, we were up at 388. We went as low as like 381. That's almost a 7-point move, but it didn't really feel like that towards the end of the day. So that's the first key. And I noticed too, I didn't explain to you. You guys remember this? Bro, this is an OG shirt. Even the logo ain't even updated. Oh, they don't feel me, bro. Shout out to Cole. I'm a cult member. I am. Amen. But that was the first key. Earnings number 2, or key number 2, has to do with earnings. You're going to have some in the morning tomorrow. And like we've been saying, this is going to be a very big key to watch because it can affect a lot of the industries, and people will start positioning pretty much depending on how Johnson & Johnson reports, or depending on Lockheed Martin. There will be sympathies. And just like we got IBM after hours, IBM gave us information regarding the strong dollar. People are going to do the same thing with the earnings. So keep that in mind for tomorrow morning. And then after hours, the growth stock story is going to come after the bell with Netflix. And I would definitely keep an eye on it. And literally, this is going to be one to watch. And pretty much towards the end of the day, we might get minimal movements as people position throughout. So keep all of that in mind. But that's the second key. And then finally, number 3 right here, baby. The Europe situation is getting weird. So we'll talk about the EWG. I brought it up today about playing a game of chicken with the premiums and trying to find the play. But what happened today, why I'm saying it's getting weird, there was force majeure news as far as Germany is concerned. And what that means is that some of these LNG or natural gas providers, they're saying, hey, we have to cancel our contracts because there is something outside of our control and we cannot meet our obligations. And literally what this is indicating is that the supply of energy coming to Europe by Friday is probably going to get delayed, and that is bad. But now, this morning, you had a lot of analysts and people talking about it on different news media. They were saying, well, maybe a lot of this Europe stuff is already priced in. So I'm telling you, I think Europe could drop 20%, and now there's some analysts saying, nah, we actually think the market dropping how it has. Go look at EWG, any of the Italy, UK plays, they're already down, and they're saying that is the reaction to this already. So kind of interesting. We'll see what happens, but keep your eyes out for that. Again, Thursday, we're going to find out if that pipeline comes back on, and then we're going to even hear from the ECB. So that will be something big to watch. But besides that, it's going to be all about earnings. Wait for the industries, and I hope you're ready for it. Sympathy plays are going to be left and right for the next week or so until we get pow. So I hope you're ready. But let us get into the plays. So, right off the bat, I got a couple of plays. We actually took profits on a few today, but then we were able to get some very, very good earnings plays, and I was excited with that. So, first play I'm going to start with is Tesla, and why I'm starting with Tesla here, because one, I made another play on it, but now I'm going to go over the Netflix play after this, and you'll see what I'm looking for. But the idea here is to take advantage of pre-earnings, and literally what I'm thinking with Tesla, we caught like a nice 50% on a contract today. The ones from last week are down, but I'm starting to see the contracts move, and the idea is Tesla's on Wednesday. If we could play back and forth and play the premium crushes and pretty much do the opposite of what the market is showing, I'm hoping that we can get an earnings play and walk away with free contracts. So that's the first play, but now let's jump to where I'm getting this idea. Here is Netflix. So if you guys remember, last week I told you I'm going to throw money on both sides, and that's what I did. If you remember, I grabbed the August put. I spent about $200. That play right now is down about $50, so it's actually not down too bad. At one point, it was down 50%, but it came up a little bit. But remember, I bought that put, but literally the same day there was that Netflix news, I decided to go with the call, and I bought them at $2 a pop, like literally 4 or 5 days ago. But as you see here, I sold it this morning at $7.10. It even went up to $800, but pretty much I bought the put for $230. I bought the call for $200. That's $430 total. But what ended up happening today, I sold out of the call for $710. So that's a $300 profit. And then I went and I grabbed another further out the money call for about $1.50 today after I sold it. So leaves me with $150 net profit. But now, as you see, I'm in Netflix for earnings both ways, even though they're about like 10-15% out the money. The idea is we could play the run up, and now leading into tomorrow, I'll still have one more play on the hand depending on if it moves big or not, but that could be an opportunity. So pretty much this is what I'm trying to do with Tesla. I have yet to buy the calls, but I grabbed another put on Tesla today. Which one? I think it was the 555 for next week. If you remember, I had that other play, and that one is actually like clobbered. I bought them for about $1.50. Now it's only worth like 30 cents. I bought the 500 put, so I lost $1.50 on that one. Grabbed these ones today. They're up like $100, so we'll see what happens. happens. But now the next move would be, once I'm up on these Teslas tomorrow, if there's that pre-earnings run-up, I could buy the call, and then hopefully leading into Wednesday, we are either going to bank on the put or bank on the call, or we get cucked and lose on both sides. Yes, that is possible, and that is the risk that we're taking. So keep all that in mind, but that is the first play. Coming into the second play now, XLV. I took this play and got washed on it in the morning. So the good part, it didn't drop too much. The spreads are a little bit weird, but I was saying yesterday, I like healthcare. Unfortunately, it ended up literally being the weakest industry on the day today. I was waiting for Abivi news. That one didn't really come in. Just healthcare was overall just not too hot, but I still like this idea, and the fact that the premiums didn't get washed too hard. If it does go down like 50%, I'm going to average down, but I like it. Has a decent amount of time, and if we do get some level of defensive shift here in the next couple days, I think it will be good. But I grabbed the October, I think these were a little bit further out the money, 145 calls. I just put in a low order and got filled. So even after today, the spread is like 15 cents, but the ask is higher than what I paid for. So we'll see what happens, but I bought 4 of those for 45 cents. Still like the play and going to be keeping my eye out for them, but definitely watch healthcare if we get a defensive shift, or any of these earnings like J&J and anything like that could kind of spark movement into that area. But that's the second play. And then finally, number 3, baby. I like this one, IBM. Why do I like it? Because we have hit some very big earnings continuations on IBM. I don't know if you guys remember, but watch for continuations. This thing can move big on the post-earnings continuations, and usually the premiums get clapped in the morning, but we saw how big the bank stocks continuations were. That was our first little insight into any continuation plays. And if you're not familiar, what a continuation play is that after earnings, pretty much it's going to confirm and continue the movement. So if the stock shot up a lot, it'll probably come down in the morning and then continue on the upside and maybe go another 3-4%. And then same thing for the downside. If it drops 5%, may bounce back up to -1 in the morning, and then by the end of the day, it'll be back down another 10%. So the idea is we could play an earnings play, get the continuation, but now that earnings has reported, usually you wake up with the premiums a little bit lower since some of that earnings premium has gone away. So that's what I'm looking at for IBM. We already saw big continuation moves with bank stocks, so it could be very good. But I'm telling you, the name of the game this week, especially leading into Powell, it's going to be all about sympathies, and that's also what we learned today from IBM. Their strong dollar, that was the reason why they guided down on the free cash flow, any of the segments that didn't do good. It was literally the strong dollar. IBM gets over 50% of its revenue from other countries, so a strong dollar means less profits for them when they have to convert it. But this is our first insight into, hey, what happens if a company is making a lot of money and now the dollar is strong? Well, IBM kind of showed us, because in April they were only factoring, I think it was like a 3 to 4% loss based on foreign currency. After this earnings, they said by the end of the year they're expecting to lose 6 to 7% of their profit simply because the dollar is strong. So now factor that into some companies. Some people asked me, they were like, well, Josh, does that mean any of these other companies will get clapped bigger because they're bigger? And it's kind of tentative, because IBM does $15 billion in a quarter of revenue. They still make a lot, believe it or not. So that's a pretty big effect. Right now, it looks to be about 6 to 7%, but every company is different. And now that's the name of the game. And again, that strong dollar information, this is why I'm saying be on the lookout for any of the sympathies. So those are the main plays. As far as everything else, again, we made a couple of other plays today. Sold out of the Netflix, rolled over the UNG. Oh, remember, we got this. We might get our third 1,000%er on UNG this year, but we're up just under 500%. We bought these for like $1.50 right there at the bottom. I have 5 remaining after making it free. I decided to sell 2 of them today at $5.50, get $1,100 back, and I have 3 contracts remaining. So there was that play, and then I closed over my oil contract from a couple months ago. Ended up losing $4,800, but we were up about, I think, $4,000 on the previous one that we took the profits and rolled over. Again, futures are kind of like options where they have an expiration situation, but you don't lose anything. You either take your profits or take the loss, and then if you want to go to the next contract, you can, and that's what I did, and I moved to the MCL V22 contract for October and pretty much kept that oil trade alive to see what's going to happen, baby. But there was that. Besides everything else, let's see the E-Trade. I only did the Apple Play 2. Again, we actually did 2 of those. This one was good. Again, we caught the Apple news so early. I grabbed one of the 144 puts for this week at 56 cents. They went up to like $1.20 and Apple's dropping after hours. But even then, I tried to take advantage of a call and spent $60 on a 152. So we're both ways for this week. The Apple puts I grabbed last week, they're down about 50% at this point. So hopefully I could get a call, but Apple calls are still cheap and now the puts are cheaper. So we still got to give it a little bit of time, but watching out for that. Then we grabbed the Tesla and XLV, and that was pretty much it. Again, I will be watching a lot of earnings plays. Again, IBM continuations, J&J in the morning. That's going to be a big one. And then Tesla, I think we might be able to have a couple of opportunities, especially as we still have the catalyst on Wednesday. But don't forget what we brought up last week, dollar, equities, Fed futures. All 3 of those things are in play, and they could all move at different times. So that's what I'm going to be watching. Sprinkle a little earnings on top, and then see where everything's at until we get Papa Pal next week. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, stay faithful to the game. I didn't even get to give you this philo, but the point is, if you've been working on something for a couple years and you still working on it, you're on the right path, baby. So let's go. Bring it home. You could always adjust. You could always learn. Remember what we said last week. Be specific with the problems so you could get a specific solution and you're going to be good. But guess what? I'm here to tell you, you have a future and you're on the right path, baby. So let's go, baby. Make sure you're hydrated, healthy, ready to go. I'll see you in the morning, but you got the hype. Go do something positive. Bring 110% tomorrow. And shout out to you for working on your craft, chat. I love you. I'll see you in the morning. Thanks for supporting. And if you got one of these shirts, you a OG. You a real one. Shout out to real. Y'all make me happy. I'm gonna go happy. I'm gonna go like Pharrell, baby. Okay, now I need to just take it now. I don't know why I just did a cross. I don't know. Amen. God bless you. Amen. God is good. I love you. Okay, bye.